We specialize in investing in science startup businesses, and we've done it for a very long time. We started in 1983, and so we've done more than 200 investments now in this. It's quite a specialist area, so we like to think that we're very good at this particular thing. And in 2012, the government introduced the SEIS scheme, which is absolutely perfect for what we do. It's for investing in startups, which is what we do anyway. You get back 50% of your investment in year one in cash as a reduction in your income tax. So what is not to like? What other investment gives you a guaranteed 50% return in cash in year one? I mean, it makes an enormous difference to the eventual outcome. Also, all the gains when they come are tax-free, and it's outside inheritance tax. So it's a perfect scheme for us. So we then started an SEIS fund, and we told everybody that we thought we'd do very well. And we're now able, 10 years later, we've made 50 investments in the fund, and indeed it has gone extremely well, as we can show you. So we've invested in 54 startups in that time. We are well known, because we've been doing this for such a long time, we are well known in our niche. So we get about 1,000 people every year approaching us, wanting funds. That includes everything, casinos in Las Vegas and so on. But among those are about 100 which are science startups, and we look at about 20 of those in some detail, and we make about 5 to 6 investments per year. So having that big choice, makes a big difference, because we can choose, we hope, the best ones from among that large number. What else? Oh, yes.
Some of those. Some of the points are there. So if we get your money, we'll invest into 5 or 6 startups in the first year. We'll then use the remainder of your money. We'll take about a third of the money you've given us, and we'll invest that in the first year. In the first year, we're looking for companies where we can get a big value-enhancing step. Maybe the final experiment is done, or the first customer is found, or whatever it is. It was something. We'll only invest if there is something of real significant value which can be achieved with the relatively small amounts of money that we put in to begin with. We don't back things where you need 5 million just to get going, to build your team, to do this. We need to be able to see that there is something that's going to really make a difference in that first year. In the second year, we take a look amongst the companies, which ones are doing well, which ones are hitting their milestones, which ones need some more money. We'll invest in those. If companies really haven't done well at all, I'm afraid they won't get any more. But if they're doing well, we will. Sometimes they do very well, don't need any more money. That's kind of disappointing for us because we can't put in more. But it doesn't matter. That usually means that the exit will be big when it eventually comes. And although there's these lovely tax breaks, that's not what we're aiming to do. We're not a tax break company. We're a big returns on development of science and technology company. That's what we're interested in. And it's just that the SEIS is really conducive to it. You get these nice tax breaks. If a company happens to go down, which has happened to 4 companies in our fund so far, then any of the money that you haven't already got back from the taxman on that company, you can write off your income as well. So unless things go catastrophically wrong, the worst you can do on any individual company is to lose 40% of your money, which is you can achieve on a good day on the stock market, just in one go. But it is high risk, and it is very illiquid. You won't be able to get money out when you want it. It will come out when it's good and ready, and it's turned into a lot more money than it was to begin with, hopefully. So we like to invest in companies nearby so that we can go and get our hands dirty, get involved with the companies, help them with whatever it happens to be, whether it's filling out the SEIS forms so that they get filed properly and everyone gets their tax returns, or introducing them to another company that's got some technology that works well with what the company's developing, or introducing them to a first customer, or whatever it happens to be. So we do that with companies who are nearby, but we have an office in Silicon Valley, and we have an office in China. Chinese office hasn't been able to do much in the last few years because of COVID, but some of our companies are in discussion with Chinese partners, and it's really helpful to have a Chinese speaker who understands engineering and can support those discussions. Well, I think we've said enough about the tax relief. We're at stand 26, by the way, not 92. But if you look at it upside down and back to front, you'll be able to find us anyway. They changed the numbers at some point. Well, you know, the whole event was redone, but it was very good. If you want to know more about SEIS and EIS, come and talk to us. Happy to tell you about that as well as our fund.
So this is, we're very transparent in what we do. So every quarter we produce a report, and it has a page of information on every one of our investments, including the failures. It also lists the failures. I don't know any other fund manager who's so transparent. And we do that partly because by telling people in detail what's going on, quite often our investors are able to help. They say, oh, I happen to have a friend in Australia who's interested in this technology or whatever. So quite often there's sort of synergistic things happen. And if you want to see a copy of our report, if you come to our stand afterwards, we can give you one. It's also downloadable on the website. So those are all the investments we've made. This is the first one in 2012, and the bar, the grey bar is the amount invested. The green bar is the tax relief, so you get that cash back very early. And then the blue is the value of the shares today, as measured by the latest share price paid by an incoming investor. So in that sense, it's a conservative valuation. If the companies go well, we don't increase the value unless and until somebody invests at a higher share price. If the company does badly, we do write down its value. So those values, in that sense, are conservative.
Yeah.
And then the overall figures for the whole fund are on the right. So the total amount invested is so far 10.6 million. The cash back in investors' hands in tax breaks is 3.9 million. The cash back from exits is 2.26 million. The cash in escrow, which will be paid in next September, is 1.15 million. The value of future milestones, the fair value we estimate of future milestones from one of our exits, we estimate at 3 million. And then the value of the shares is 28 million. And then the value of the potential milestones above that is another 38 million. So, but those milestones may or may not happen. So
as the company, so we backed a biotech company right at the start. It was an idea. It was well-founded idea, but it was an idea. It went through, and it was then purchased by an American pharmaceutical company in September last year. And as the company that has acquired them goes through its clinical trials, every time they do a clinical trial, we get a chunk more money. And then once they get to sales, when they hit certain sales target, we get more money again. So if that one all works out, it's 127x return, but only on that company there. And if you happen to be lucky, as I was, to be in the 2014 portfolio, then roughly one-sixth of my money went into that. So multiply that up, it's about a 20-fold return, if it all comes good. It's going very well at the moment. And but anyway, here we go. Here are some examples of our companies.
Yes.
Run 3D.
Run 3D, okay. So this was a girl from Oxford, very clever girl. She's called Jessica Leach. She got a first-class degree in engineering from Oxford. She's also a runner. She's an international runner and runs for Wales, and she just loves running. And so when she graduated, she then did a DPhil in the biomechanics of running. So she really understands how running works. And it is an amazing thing that everybody's gait is different. You know, we all got 2 legs and 2 knees, but everybody walks in a different way, and everybody runs in a unique way. And what she does, you put beads on the legs of runners, and then you run on a treadmill, and then there are cameras which capture the data, the position of those seats at 200 frames a second, and then it all goes into a maths engine, and it works out exactly why you're running the way you are, and how you could improve your running, and why you're getting injured. And most of the people who come to the clinics come because they've been injured. And there are 2 million runners in England, and each year 1 million of them will get injured. So it's a surprisingly big market. And we've now got, the business has grown, there's the list. It hasn't gone as fast as we would like, but nevertheless, we've now got 34 clinics around the world, most in the UK, but we've got 1 in the US and 2 in Europe and 1 in Singapore and places. And each clinic pays between £600 and £1,000 a month. So it's beginning to be a very solid business. It's just about at break even now. And if we can get up to 500 clinics, it'll become a very valuable business.
Yeah. And if you think that many people run, more people walk, and eventually people end up having trouble walking.
Yeah.
So we've developed Walk 3D, where you can identify, using this, what this does, it allows the podiatrist, or a physiotherapist to identify exactly which muscles are not pulling their weight or which muscles are too tight, which then allows you to have extremely directed exercises to recover it, and then magically it gets better.
Yeah.
And one of the things that they were working on was people who were going to have a knee operation to see how the gait would change from before the operation to after. Of course, they did the Run 3D or the Walk 3D in this case. They said, this muscle, you should do these exercises. Some people have been able to avoid the knee operations. And so a much bigger market even is Walk 3D. If anyone has any trouble with their walking or running, please look them up. It will be a very good return for you, aside from the investment.
I'll just say one more thing too. It's an example of how we work with the companies. We are very actively involved with them. All our companies are within an hour's drive, and we do that. That's not quite true, but it used to be true. They're still close. And we have regular meetings with them to help them. And in this case, the original software we had after a few years turned out to be not good enough. And so we decided that we would rewrite it from scratch, and we didn't have money with which to do that. And so I flew with Jessica at 5 o'clock in the morning, because it was very cheap, to Amsterdam. And we spent all day there with a company that specializes in this field. And at the end of the day, we'd done a deal with them by which they would rewrite the software under Jessica's direction in exchange for shares in the business. And when we got that new software, the business was transformed. It was much better, and everything since then has gone well and fine. But the point is, we are actively involved with the business development of these companies. We're not passive investors. Jessica used to ring me up every day to begin with, because she didn't know anything about business. Now she's got a quite successful company, and I only talk to her every 6 weeks, let's say. And she's a very competent businesswoman now.
So cryologics. So I was speaking before to a gentleman from the pharmaceutical industry who's telling me about how they need cells when they culture them. Cryologics are the first people in the world who figured out how to freeze cells in such a way that when you thaw them, you can use them immediately. And that saves 2 weeks of preparation for every experiment. So imagine a world where you have to cook from scratch, but from scratch, I mean you plant your plants, you grow them, you harvest them, and you have to do that every day for every meal. It's kind of bothersome. If you can have it straight out of the freezer and then use it in your preparation, much better. That's effectively what they've figured out how to do. And so now the big pharma companies are starting to say, actually all these people who just culture cells, and it still takes time when we have an idea of an experiment, we could replace them with a freezer. And we say, and the people who really love culturing cells can come and work for us. We'll culture them here. We'll be able to ship them to everyone. And customers are really, really delighted in this, because they can focus on their science rather than on culturing cells. One of those little plates, we'll will sell for about anything from £400 to £2,000. It's not very big, and if you do lots of them, it doesn't really cost very much to do them. But it's a very profitable business, almost as profitable as software, but not quite. Anyway, that's one we invested. The share price is a bit more than doubled, and it's just really getting started. Lightpoint Medical is one of the companies right from the start. They have figured out how to find cancer during an operation, so a surgeon can actually know whether they need to remove something before they remove it, because it's very difficult to put things back in bodies once you've taken it out to check whether it's got cancer. And I think, let me see, will the video run? No, the video doesn't run, so I've spared you some agonizing bits. But basically, it showed a surgeon finding a lesion on a lung, and the surgeon said, there is no way I would have found that lesion if I hadn't used this. So basically now, I'm going to use this in every operation I do. Now, I told this story last year, I was here, and I was hoping that we'd have a really big uplift from where we were last year. Unfortunately, that hasn't been the case. COVID caused a problem with their chip supply, so the company took a bit of a knock, and they're having to exit at just 10x for us, which is sad because it could have been very, very many more than that, but still not too bad. Zaindu is a company that does growth in many ways. They've discovered or developed a system for cleaning seeds so they're sterile and they won't have any infections on them. And in doing that, they also discovered that when you put the plasma that they've developed on the seeds, the plants grow faster. I mean, significantly faster, and they all germinate at the same time. So if you're running a vertical farm, your output might go up by 20 or 30%, which is a lot of money on a vertical farm. And so they developed a machine, it goes out to the companies, they pay monthly for the use of it, and that could be a surprisingly large market. Well, not too surprising, there's lots of food around and lots of people who use it. Right, so this is, just so I understand how the investments go, this is my portfolio from 2014. We started with a company called Expend, which helps with expenses if you have any. Molecular Warehouse. This company hasn't worked out so well. I can tell you the sad story of that if you come down to visit at stand 26. Animal Dynamics has developed drones that are able to transport far larger loads than anyone else, basically, at far lower cost. Ducentis is a company that we sold to the American pharma company. BioArchitect is developing viruses that take out cancer. Orbit has a new way of discovering drugs, helping with that. Coryllium can prevent cancer from happening in the first place, especially bowel cancer. Oxford Nanoimaging has a new way of new types of microscopes for research. Entia enables cancer patients to stay at home rather than going to the hospital to have unnecessary tests. And so, as you see, as we go through the quarters, a bit of money was added and the value of the companies went up. I had a little left at the end of 2016, so we put that in Covatic, which is another company in the fund, which will get rid of all those cookie requests on your phones. Yeah, like that, don't you? Yeah. Q2, Expend went well. Molecular Warehouse was doing very well at the time. BioArchitect, Ducentis.
Each one of these represents a quarter,
yeah,
is that true?
Yeah, 3 months. Every 3 months, something happens. And then present day, there's a gap. But in the meantime, Ducentis has had its exit. And so I'd invested £15,000. So you can see that I've got basically my £15,000 back just from Ducentis, or will do by the end of the year. Expend is doing very well. BioArchitect, still got lots of way to go. Coryllium, seriously, if you can just take a pill to avoid the progression of bowel cancer, then that's a pretty nice option. And yeah, it's all generally looking up. Yes, Lucentis, that was a company, they started off with an idea of developing something against autoimmune diseases based on something that viruses do. And it was then bought to start off for using it for atopic dermatitis, skin conditions, by an American company. And overall, those are the returns for people in all the different years. So you can see every year is doing well. The most recent years, of course, haven't had a chance to grow yet, so they're lower.
Yeah, we should just maybe explain this graph a bit. So for people who invested in 2012-13, if you invested £100,000, you've so far had back in cash and returns about £60,000, and the value of the unrealized value now takes the overall return to about 3 times the original investment. And if you invest in 2013-14, you're nearly at 5 times. If you invest in 14-15, it's 6 times. 15-16 is about 6 times. 17 is 3 times. So all, sorry?
Yes, and then
then these ones haven't had a chance yet. You know, they're beginning to grow. And the most recent one, of course, is the grey bar represents the uninvested capital. So that's just the start. So we hope that you know, those blue bars will continue to go. This is what we told investors at the start, that this is the kind of thing we hoped would happen. And now we've got the 10 years of track record to say that it's happened so far, and we would expect it to continue, but of course we can't guarantee that.
Yeah. So that's it. Oh, not stand 260, stand 26. But it's near the food, it's in the middle, you'll see us. We're where the crowd is. Come in there, come and talk to us.